It is Thursday evening on the Business Channel, and that means you're watching the Shares edition of Your Money, Your Call. Great to have your company this evening. I'm Nina May, and I'm joined by Roger Montgomery and Todd Kerslake on my panel tonight. Let's go straight to our next caller. We've got Brent from Newcastle there. Hi, Brent.
Yeah, g'day guys. I've been following a company for some time now called Customers Limited. They've really benefited from the RBA's changes to ATM fees, and I just wanted to know the panel's opinion on where they see in the future of the company.
Look, I think this is one of those terrific businesses. It's a business that I really like. How many businesses do you get where you charge people to get their own money? You know, it's just a fantastic opportunity, you know, and the share price, my understanding is the share price has done very well, and rightly so. It was cheap compared to its value back in March. Its value, I think, will continue to rise over the next couple of years, but it is now more expensive than what it's actually worth. So I prefer to only buy things when they're cheaper than what they're worth. That opportunity has now passed.
Todd, any concern though that in the future with this company that it could be, well, I guess the whole ATM fee structure could be subject to more stringent regulations, and that could then have a flow-on effect to affect a company like Customers?
There were some problems because of the regulations, and that's actually only just moved to their favour, and in fact that's why you've seen the share price perform, or one of the reasons why it's become popular again in the short term. Yeah. All
right, thanks for that. Tony from Melbourne, our next caller. Hi, Tony.
Thanks for taking my call. My call's in regards to Worrell Parsons. I just want to see, Roger, what his valuation on the stock is. I bought it at about $16. I'm just curious on what he values at the stock and whether the outlook for it is. Thank you.
Okay, let's take a look at the chart then. So he bought it at $16, sitting on about a $13 profit there. That's a pretty good gain, I have to say. Looks like he's bought near the bottom.
Worrell Parsons is a terrific business. Like Monadelphous, it has a relatively high rate of return on its equity. Its debt is manageable. It's a good business. It's not cheap anymore. I don't have my valuation sheets with me today, so off the top of my head I can't tell you what the value is. Send me an email and I'm happy to send you the valuation. But I remember looking at it only in the last couple of weeks, and it's not cheap anymore. I think the value of that business will rise. Todd, you were talking earlier about China and China demand for resources continuing to be strong. If that's the case, then the outlook for these businesses generally is good. And so you would expect that if they're able to reinvest their profits at high rates of return, they're going to increase the value of the business over the next couple of years. So you'd expect to see the valuations rise, and that's a good thing.
Eliza from Victoria. Hi, Eliza.
My question is, actually I've got two questions. How do you think AGL shares will go in the short term and the long term? And my second question, what shares would be good to get into at the moment with really high return?
Macmillan Shakespeare is a business whose value is, or appears to me to be, substantially higher than its current price. I have to confess that I've been interested in this company and have an interest in this company from a while ago. It seems to be one of the few companies at the moment that has little or no debt, very high rate of return on equity, and its value, and I've got it here with me. I reckon it's worth about $4.40, $4.50. It's trading at $3.53. So there's not many companies like that in Australia at the moment. I've said this one before, JB Hi-Fi. It seems still to be below its value despite the big run-up that company has had. And I know a lot of people have said to me, Roger, the PE's too high. Well, I don't look at PEs, and I look at the intrinsic value of the business. It's high. And here's an interesting thing. I've done some work on the banks. CBA is now head and shoulders above the other three banks in terms of its economic performance. Okay. That has never been the case before. They're always pretty much of a muchness. What's happened is they've all gone and raised capital. They've all gone and issued a lot of shares. But CBA bought Bankwest from a distressed seller, and that's going to boost its return on equity over the next couple of years to sort of 21, 22%. Whereas all the other banks, their return on equity has dropped from 21 or 22% to 11, 12 and 13%. So in terms of economic performance, the CBA now stands above all the other banks. I like businesses that are great performers, and so those three are examples of businesses that have great economics, little or no debt for the industrial companies, and trading at a discount to their value.
Let's go now to Anthony from Queensland. Hi there, Anthony. Thanks for waiting so patiently tonight.
Thank you so much for taking my call. I wanted to just ask the gentleman about Rex Airlines.
Rex Airlines, okay. Regional Express.
I can talk a lot about airlines. Wow, look at that share price. People just don't learn, do they? You'd never want to own an airline. Airlines are terrible businesses to own.
Sounding like Warren Buffett.
They are terrible businesses to own for a very good reason. They are capital intensive. Look at an airline that's been around a long time, Qantas. You and I, Nina, could have started that business in 1999. We put $2 billion of our own money into it, borrow $3 million from the bank. Next year we make $500 million profits, a 25% return on our equity. We're feeling pretty good. Fast forward 10 years to this year. We make $100 million, which is a quarter of the profit that we made 10 years ago. Not good. On top of that, we've had to inject another $2 billion of equity to get that profit, and we've had to go and borrow another $3 billion of debt. Now, that doesn't seem like the recipe of a great business. And because airlines are capital intensive, they're really tough businesses to own. Now, Rex has one advantage. You know, on some of its routes, it doesn't have competition. And competition is a major problem for airlines on top of the issues that I've just discussed. So from that sense, there's an advantage, but it doesn't get away from the fact that they're capital-intensive businesses and again, an exception for Rex, but most of the time people don't care who they fly with. They just go for the cheapest possible price. Again, Rex is slightly insulated from that, but I don't think whether it's a regional airline or a larger international airline, I don't think the economics of airlines changes that much long term.
Okay, Mark from the Hunter Valley, nice place to be. Hi, Mark.
Hi, how are you?
Hi, terrific.
Yeah, well, lovely show. Now, my question is on SLR, Silver Lake Resources. It's a up-and-coming little gold stock. It seems to have a low cap of about 120 million or so, which doesn't seem huge to me, but I'd like your comment on that. Is that huge? It doesn't have any debt. It seems to have a lot of growth in the pipeline, and it's generating $2 million per month. And it's going to be expanding by the year 2014, doubling their production and so forth. I'm just wondering about SLR, please. Thank you.
Gee, we get some callers and some viewer emails about this company. I'll tell you why, and that graph probably explains why there's all this interest in it. Gentlemen, can you make any comments about Silver Lake Resources?
Well, look, we've got some numbers. This gentleman, Mark from the Hunter Valley, he's actually told us that, you know, if it's got a market cap of 150 million and it's generating, I think he said 2 million a month. Did he say 2 million a month in cash? I thought he said 2 million a month.
He did say they had no debt.
And no debt. Yeah. So 2 million a month, that's 24 million a year. So you're talking about something that's trading 5 or 6 times cash flow, if that's indeed the numbers. And you know, if you've got a bullish view on gold and you're looking at that combination, well, you know, I need to do a little bit of more work on it just to see what the return on equity is. But it strikes me that they're the right kinds of economics that I like to listen, I like to hear. So, yeah.
Take a short break. Back with more of your questions on Your Money, Your Call in just a minute. Stay with us.